Welcome back to another video. Soil here, and today I want to teach you a very simple scalping strategy with high degree of accuracy, which is specially designed for scalping in trading ranges when the market is not trending. To run this strategy successfully and profitably, you need to consider some important points, which I'll explain all of them throughout this video. Just make sure you watch this video until the end so you won't miss any important points. Without wasting any more time, let's get started. Alright, this is a 5-minute scalping strategy. So here we set the chart time frame on 5 minutes. This is the price chart of Bitcoin, but you can use this scalping strategy on any other financial asset, whether it's crypto, forex, or stocks. The only requirement for this strategy in terms of the asset or market is the trading volume and liquidity. This is a scalping strategy, and we're going to actively trade in a day, and the profits that we're going to take are very small, so we don't want to experience unreal price gaps or large spread between buying and selling prices that are caused by insufficient order book, because this can damage our trade entry, stop loss, and take profit order. For this strategy, we must add 3 indicators to our chart. For adding indicators, here we click on indicators and we simply search the name. The first one is RSI, this one. And for RSI, we must adjust its settings. Here in the inputs tab, for RSI length, we set it on 7, and that's it. The next indicator that we should add is a stochastic oscillator, this one. And for this indicator, we must also adjust its settings. For the K% length, we set it on 7. For the K% smoothing, we set it on 3. And for the D% smoothing, 3 is fine. And the last indicator that we want to add is Bollinger Bands, this one. And we use Bollinger Bands with its default settings. We've already set everything we need for this strategy on the chart, and before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, now let's see how we trade based on this scalping strategy. This strategy is a volatility based trading strategy, which means we take advantage of the extreme movement of the price for entering a trade. Here we don't focus on finding trends and entering in the direction of trends, but by the help of this strategy, we just enter a trade whenever we have extreme volatility and the price reaches to an overbought oversold level. So this strategy is especially useful in times when the market is not trending. You can use this strategy alongside with a trend following strategy for the times that the market is not trending, so you can switch to this strategy and take advantage of the flat market and make some profit. Please pay attention that here in this strategy the risk is a little higher in compared to a trend following strategy, because here in this strategy we don't necessarily enter in the direction of the market, and in times that the market is in a trading range, we actually enter against the prior movement of the price to catch possible increased volatility in that direction. So keep in your mind that this strategy is a little bit riskier in compared to a trend following strategy, and make sure you watch this video until the end, because at the end of this video I'll explain how you can manage your risk properly. Alright, as you can see here, the market is not trending, it's in a trading range and moving sideways, and we're going to take advantage of the situation of the market and find trading opportunities. In this strategy, for entering in a trade, 3 conditions must be met. Let's begin with a bullish signal and how we enter in a long position. The first thing that must happen is that the price must break the lower band of the Bollinger Bands, which means that a candle must close below the band. Then we look at the RSI. The RSI must show oversold level, which means the RSI line should be below 30. And finally, we check the stochastic oscillator. The stochastic also must be below 20, showing oversold level of the market. And finally, when the K% line, the blue line, successfully crosses above the D% line, the orange line, it gives us the signal to open a long position. So we can enter a long position here as the new candle opens. The stop loss for this trade is placed here just below the Bollinger Band, and the profit for this trade is taken when the price reaches to the middle band of the Bollinger Bands. You can also take your profit when the price reaches to the upper band of the Bollinger Bands, but this will have higher risk of not catching that level, because this middle band acts as a resistance level here, and most of the times the price stops at this level, as you can see here. So it's better to lower your risk and take your profit when the price reaches to the middle band. Having a smaller profit but with greater degree of probability is a better choice, especially in scalping where you open many positions in a single day and your total profit will add up gradually. Moving on the chart, here again again, the price closes below the lower band of the Bollinger Band. Another one here, the RSI is below 30, the stochastic is also below 20, and here at this point, the K% line crosses above the D% line, so we can open another long position here as the new candle opens. The stop loss for this trade is similarly placed below the Bollinger Band, and we take the profit for this trade when the price reaches to the middle band of the Bollinger Bands. Moving forward on the chart, here we got an opportunity for opening a short position. As you can see, the candle closed above the upper band of the Bollinger Bands. At the same time, the RSI is above 70 and the stochastic is also above 80. Shortly after, here at this point, the K% line successfully crosses below the D% line, so we can open a short position here as the new candle opens. The stop loss for this trade is placed above the upper band of the Bollinger Bands, and the profit target is similarly at the middle band. After this, here the price again reaches to the lower band of the Bollinger Bands and breaks it, and the candle closed below the lower band of the Bollinger Bands. But the RSI and stochastic oscillator didn't give any signal for taking any trading here at this point, so we don't take any trading here at this point. Please pay attention, as I mentioned earlier, we are in a trading range and the risk of taking any trade is higher in compared to taking a trade in the direction of the market when the market is trending. So in this situation, managing your risk is extremely important. And besides this is a scalping strategy and you're going to actively trade and you may open many trades in a single day. If you don't manage your risk properly, you will not be able to run this strategy successfully and profitably. Losing trades are part of the game and winning every single trade is impossible in reality, so you must exactly determine how much you're going to lose on each trade if the market goes against your position. There is a risk management strategy for active trading which is called 1% rule, and by the help of this strategy you only lose 1% of your trading account if the market goes against your position. Here in this video I explain this strategy very shortly because I have a complete guide to 1% rule strategy. The link is also in the description of this video and I recommend you to watch it later because it's really important to manage your risk properly. Getting back to our strategy, as I said, we're gonna lose 1% of our trading account on each trade in case if the market goes against us. Consider we have a $10,000 trading account and on each trade we want to lose 1% of this, so that would be $100. Consider we want to enter a long position on Bitcoin at $30,000 and we want to set the stop loss on $29,000 for example. So here the maximum loss per coin is $1,000. Now we divide our defined maximum loss amount, which is $100, 1% of our trading account, to the maximum loss per coin, which for this trade is $1,000. The result is 0.1, which is the amount of Bitcoin that we must buy. So we buy Bitcoin worth of $3,000, nearly 1/3 of our trading account, but without any worry, because if the price goes against our position, we only lose $100, only 1% of our trading account. I highly recommend you to watch my video about 1% rule strategy, because without this risk management strategy, you cannot achieve consistent profit with the strategy I explained in this video. Not only with this strategy, but with any other trading strategy. For running it successfully and profitably, you need to manage your risk properly. Please pay attention that scalping is not recommended for beginners. So if you don't have much trading experiences, I highly recommend you not to trade with real money. Executing a scalping strategy demands experience and well-developed psychology because of the speed and higher number of trades and the ability to manage them. Practice as much as you can and start with real money only when you're consistently profitable in paper trading. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.